can you share like paint a thumbnail version of your career, your background? How did you come about insurance industry in general? So would love to hear more.
Sure. So I started insurance right outside of high school, actually. I started in the claims department of Assurant Group in Miami. It was right behind my high school, and they had work programs, and I was in the work program in my senior year. I was in my teenage at that time, and of course, car insurance was high. So a friend of mine recommended an agent who, we became friends, and she was an Allstate agent. And one day, she told me she left Allstate. She wanted to open her own branch. So right out of high school, I wasn't sure what I wanted to do either. And I said, hey, how can I get in with you? Or, how can we do this together? Because I always thought car insurance at that time was really interesting because, I enjoy cars and things like that. So, fast forward 20 years later, we started our own agency. We opened in November of 2003. It's an independent agency. Where the difference between a captive and an independent is where the independents have multiple carriers. A captive would have just that one carrier, such as your State Farm or your Allstate offices or Geico. But we represent multiple carriers on the market, and we've weathered a lot of storms throughout the years. I've learned a lot in my 20 years. This market has definitely had its ups and downs. Also in 2009, my partner as well, she did real estate, and I kind of piggybacked off of her and learned that market as well. I got my license, and when I got my license, that's when we hit the first recession. And, but I learned that was a great time for me to learn real estate. So I am a licensed real estate agent as well. So I understand my brokers who I do business with. I understand their lingo. I understand what they're trying to get done. And we all have the same goal. Today, our office is located in Hollywood. We have plans to expand a branch in Port St. Lucie. However, we can write in multiple states as well. We can write business right now in Georgia, South Carolina, Texas, and New York as well. Mostly everyone is virtual, but mainly our focus our main focus in our agency is personal lines insurance, which is your home, your auto, umbrella, flood, and things like that. We do a lot of commercial lines as well. So we're very well versed. And I think that's what sets us apart from other agents, is that some agents, they only know how to do one line of business. Mm-hmm. As far as my office goes, we pretty much can take, we pretty much are well versed in multiple lines of business.
That's super exciting, man. And I appreciate sharing that background about, the humble beginnings and to where you at right now. That's definitely, worth mentioning. So congrats on all of that growth. That's pretty impressive, and going through different cycles of the iterations, the recessions, all of that great stuff. So I'm sure that was not easy. So what you've mentioned, and I'll give you a little bit of a background as well, because in the past, several deals, you really helped me and my team to secure the insurance coverage for the, the assets that we were acquiring. And in South Florida, that's not an easy thing to do. There's, very limited number of options we have. In fact, like, there's probably no options. You almost stuck with just one or two, mainly because of the area we located in and the risk involved with, the hurricanes and all of that, the flood zones. So what really stood out to me throughout this process, and you kind of just validated that, is because you are a real estate professional, real estate investor yourself. So you really understand, you try to put yourself in the shoes of the investor. What are they going through? What are they trying to do with this property? Which made a lot of sense to me, because, it's one thing just being insurance agents and writing the policy and that's it. But thinking outside the box, what are the potential other things that I could run into as a real estate investor? That's what I really appreciated about that particular, relationship that we've gone through, getting the coverage for these deals. So maybe share a little bit further in terms of, from a real estate investor perspective, myself included, insurance is kind of on the back burner. It's an oversight that we only consider when it's time for closing. Maybe share a little bit more insight, the importance of the insurance and, doing that due diligence up front. And what are the most common mistakes maybe that you see that real estate investors make when it comes to insurance coverage?
Shopping last minute. A lot of them, again, as you said, they don't shop until the last minute. And then there's a lot of moving components when trying to put a real estate deal together. Insurance is sort of a boring subject. No one, that's not the first thing on your mind that you're going to remember everything I just told you. I'm sure, we went over it, but you probably, if we were to go over it again, you'd swear I never told you that,
Totally.
It's just not an interesting subject for people to remember. But, it is a very important one because there's money involved here, and we do live in the state of Florida, and we are in a catastrophic prone state. So it is very, very important to protect your investment and everyone's funds that are tied up in that investment. The hard money lenders, they know obviously insurance is a requirement. One of the things that some of them don't require is windstorm insurance. I can agree and disagree on that. If it's a short-term loan, 3 months, 6 months, and we are in the season now, like we're not in season right now, okay, you can get away if that investor is trying to be in and out of that property. When we get into hurricane season, and really that runs from June to November, the investors should be carrying wind coverage on their investments because I was once doing flips as well, and Irma, I had a flip going on and it ruined the roof. So I felt bad for those people who did not carry wind or their lender did not require them to carry wind. It's something that people should do regardless of someone forcing you to do it. It's also the agent's job to educate their client on what they should carry. This state has also had its issues. There is light at the end of the tunnel. In November, there was some reform passed. And as a result of that reform, carriers are starting to come back. They're starting to open back up slowly. They're not wide open. They're not welcoming you with, open arms, but about 3 of the carriers have opened back up, not necessarily in Tri-County, but the rest of the state has started to see the light again. And it's only a matter of time before it trickles down south. The other thing is it needs time. These new laws need to take time to prove to the reinsurance carriers, which are the people that insure the insurance companies, that these laws work and that they can prevent claims and prevent fraud and be profitable in this state, because that is the driver of the carriers allowing capacity or opening, or those are the determination of the rate, the reinsurance. So the insurance companies have to be insured, and their reinsurer is going to say, hey, you've got too much exposure, by the water, you need to shave some of that off, or we can't write it at all, or we can only write it if it's a minimum of 20,000 in premium. It's got to be a profitable risk. So there's many, many factors that go into these rates that the public does not know. However, I feel that with all the turmoil happening and everybody getting sticker shock for their renewals, a lot of people have become more educated on what's happening.
Right. No, that makes a lot of sense. And maybe shed a little bit more light on some of the non-negotiables, at least from your perspective, putting on the real estate investor hat, because as I recall, when you and I were going through the coverage for the different types of property, because there's a big difference, primary residence, investment property, and so forth. And what was interesting to me is kind of how you were guiding me through the process, that, hey, it's maybe a smaller deductible, but take a look at the coverage that comes along with that. And if the disaster was to strike, here's some of the things to consider. Maybe shed a little bit more light as far as, at least from your standpoint, if you were getting a coverage as a real estate investor, what are some of the things that you would not want to negotiate?
So it has to make sense. Being in the market that we're in, with very limited capacity or very limited options, sometimes we don't get everything we want. We have to give up something to get something. So either you're giving up coverage to get the rate, or you're taking a higher deductible to be able to afford the rate. But it also has to make sense. And as we discussed, going from, I remember it was, 10,000, let's just say 10,000 to a $20,000 deductible for, a $500 savings, that may not make sense. You know what I mean? Unless the investor particularly knows that, they're going to be in and out of this property before we get into that storm season, then maybe that's worth it for them to take a higher deductible just to save on the premium for now. In the event of a catastrophe, they have the coverage, they just would have to eat a higher deductible. But definitely deductibles are a thing, and it's really, like I said, that investor strategy, which is why they have an agent to go through it with that investor to say, hey, what are your end results? What's your exit strategy on this property? Are you going to hold it and rent it? So, we're maybe going to be talking about a completely different policy because it's a long-term permanent thing. Or if, you're just looking to fix it and flip it, that's a completely different, animal. But it's really the agent's job to make sure that the investor understands and that they're building the policy to suit their need at that point in time.
Mhm. Yeah, that makes a lot of sense. And as you mentioned, there's a lot of different variables that go into that decision-making process. But at the end of the day, it's also try to put yourself into maybe fast forward 6 months where the actual disaster did strike.
Yep.
And you're in a situation where you do have to file the claim and you have to see what type of coverage you have. The savings you may be incurring at the beginning will completely be obliterated with the amount of fixes and everything that you have to do if that situation arises, which when it comes to the working with insurance coverage companies, because there's a difference between the insurance broker and the company that actually issues the policy, right? The carrier. So one of the things that's very important to me is the relationship aspect. And I may have gotten better quotes, maybe a little bit of a better coverage, or maybe cheaper going with national brands or going with much larger brokers. But what stood out to me is when our mutual friend made an introduction to you is that, look, you're talking directly to the company owner and you have direct access to, if there's any questions or anything, in the time of disaster, he is the person who will answer the phone, where it was absolutely right. If I'm calling a national insurance provider, I'll be on hold probably for, many, many hours, and God knows if I'll even get through.
Yes.
They'll probably point me to a website and say, go ahead, fill out
File
a
a
form.
claim. Yes, that happened with Ian. The brokers are here to assist. I've had to assist when Ian happened on the West Coast. I've had some clients out there, and we did have to get involved in claims. And a lot of it. I'll give you guys a prime example. It was a brand new house that one of a mortgage broker friend that's been sending me deals for over almost 20 years. He just finished building this house, brand spanking new house. I think it closed right before the moratorium went out to lock off insurance for. So we had bounded the insurance earlier on. The closing date kept changing, kept moving. The policy ended up canceling. It was canceled technically doing Ian because of the constant changes. However, they got paid, the policy was reinstated, but that was one that I had to babysit to get it where it needed to be in order for them to take care of him. His roof is being repaired and, he's good, but it was a brand spanking new house.
Wow.
Closed, and it happened, just, and that's why, I was saying, they should carry it, because he told me the same thing up front. I want the cheapest thing. I'm going to be in and out of this. Da, 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 da. Boom. He closed, and 5 days later, he informed, and that's it. When there's a storm anywhere near the state, we go on lockdown. We can't sell any insurance. You can't change deductibles. You can't do anything. You're stuck with what you have.
Wow. What a story. What a story. And that definitely resonates.
So
on so
there
many
were
levels.
quite a few claims that, I had to babysit through, but we got them, done.
Mhm. So it's interesting because on the different side of the spectrum, I actually had a conversation about this with my wife last night because we have multiple, investments, and some of them are short-term rentals where we
Mhm.
utilize platforms, Airbnb, VRBO, and
Right,
so
right.
forth. And a question or a topic came up of a liability insurance
Right.
because yes, the platforms do provide you with certain coverage, and
Right.
probably maybe a good practice to have those properties,
Mhm.
registered in some type of a family trust or maybe an LLC. But at the end
Right.
of the day, LLC doesn't, it's a veil. It's not a shield that
Right,
provides the
right, right,
protection.
right.
Maybe talk to us a little bit further about the importance of some type of personal, maybe liability insurance when it comes to operating investment portfolio, when
Correct.
especially letting others come in and stay at your place. Maybe talk
Mhm.
to us a little bit about different options that people have and what to look for.
So majority of the time when you're insuring a short-term rental, it's typically the same policy as if it were an annual rental. It's just that the carrier is accepting that it's short-term, like they're accepting the exposure. And where the exposure comes in is that, you have one stable tenant, the exposure is less, less likely something to happen. If you have multiple people coming in and out of your property and they have guests coming in and out, anything can happen. If they throw a party that you're unaware of and cause damage to the neighbor or cause damage to the property, or they have a guest that's intoxicated and hurts themselves on the property, all that trickles back up to the owner of the property. But majority of the properties do have liability built in. If it's a situation where the carrier does not want to offer liability, there are standalone policies that will protect you against liability for that stuff. And your broker, your insurance agent would be the one to offer that to you. But
Mhm.
that is a very, very big thing that people take for granted. I mean, some examples of liability could be, let's just say they rent out an Airbnb on the 4th of July and they decide to do fireworks. I've had this happen. I've heard of this happening, not on my books, but it was a friend of mine. They blew fireworks. The fireworks landed on the neighbor's roof and caused a small fire. That's a
Wow.
liability issue.
Wow.
Yeah,
Wow.
things like that, just things out of the box,
Mhm.
or someone drown, if it's an Airbnb with a pool,
Right.
that's a big liability as well, someone drowning in your pool. um,
Mhm.
so there's a lot of exposures that you may not think of that, we're a sue happy state. There's tons of lawyers out there willing and ready to go after you for this stuff, and you have to be properly protected with that.
So you're saying at least to a certain extent, the homeowners insurance that real estate
Usually it's
investors,
built in.
so it has some type of a coverage
Yes.
built in. Is
Yes.
that sufficient enough to be able to operate a fully kind of operational
Um,
short-term, midterm
it
rental, or
meets
do
the
you recommend?
minimum requirements most of
Uh-huh.
the time. Again, because of the markets that we're in, the limited availability and pricing being so high, a lot of people are not jumping at it. But I would say on my recommendation on Airbnb properties or in liability in general should be at least $1 million. The standalone policies range anywhere from 100 to 300. Some carriers will go up to 5 on their primary policy, and then what they want you to do is get something called an umbrella or an excess policy that provides you another layer of liability protection should you have a big loss that exceeds your liability limits.
Explain a little bit further the umbrella part.
So the umbrella part is an extra layer of protection. So let's just say you had $1 million loss, but your primary policy only had limits of 300. If you don't have any other coverage outside of that 300, then that's all that claimant's going to get. Now they may accept that or they may not. If they feel that this is a big LLC, this is a big corporation, they've got deep pockets, and trust me, they'll do their research on you, they'll Google you and look up your assets. They're going to take you to court and sue you for damages, and you'd be responsible for anything above whatever your primary policy pays. Now,
Mhm.
you can buy an additional 700,000 to equal $1 million, or you can even buy more. You can go 1, 2, 3, 4, 5 million. It just really depends on how big that investor's company is. You know, if they've got a lot of assets to protect, they should be carrying more than just $1 million in liability. They
Mhm.
should have layers of protection.
That makes a lot of sense. At the end of the day, when lawyers evaluate these opportunities, is
Yeah.
how collectible you are at the end
Yeah.
of the
Yeah.
day,
I
and
mean,
if it's
obviously,
worth.
there's nothing to get, and they know the client can't pay them. They may not go after you because they can't squeeze water from a rock. But
Mhm.
chances are, if it's an LLC and they look up that owner of that LLC and their assets, and they look up the LLC's other companies, and they say, okay, they're suable. You know,
Right.
why not?
Makes sense. Makes a
Why
lot
not?
of sense.
Yeah.
So with the kind of the market that we're in right now, which is very interesting and nothing new, nothing unusual. It's typical cyclical up and down,
Yeah.
with especially when it comes to real estate. Um, what are you personally interested in when it comes to investing? What are you staying away from these days? And also maybe talk a little bit further about how did the current market conditions, especially with the financing and with the rates, impacted insurance in general?
So it's impacted a lot of the new purchase sales because a person that qualified with the current insurance rates at a 4% interest rate, they're not going to qualify for that loan with a 6% interest rate because that extra few $100s in their payment has thrown them off. Because of our limited options, um, the rate is what it is. They either can afford it or they can't. We don't have 100 carriers willing to say, hey, we'll take your business, and there's it's not a healthy enough market. It's not a competitive market yet. Basically, carriers are charging what they're supposed to charge to take on this risk, and it's not cheap. So what
Mhm.
happened with inflation, everyone's paychecks have not gone up as quick as inflation has happened with these rates and things like that. So a lot of people um can't really truly probably can't afford what they're in now, especially with these rates that are continuing to rise. What's happening now, in order to get the rates somewhat affordable for people to probably stay in their homes, carriers have now had to slash coverages. So roofs were a big thing. Roof fraud was a big thing. So what happens now is, if you take actual cash value on your roof, which is depreciated value at the time of a hurricane, they're
Mhm.
basically paying less, so you pay less in premium. Replacement costs is obviously more because they're paying to replace your roof. The market was going to continue to shift because their theory is your roof is a wear and tear item. And just like your car, when your tires go bald, you don't call up your carrier and say, hey, I need a new tire.
Mhm.
The same thing, and society has gotten used to using their insurance policy as a maintenance policy, and it's not designed for maintenance, and that's why our rates are so out of whack. So what they're doing now is they're forcing us to say, all right, yeah, we'll pay you something for the roof, but on a 20-year-old shingle roof at the end of its life, and we get a storm this year, we're not going to give you a whole brand new roof. You're going to just get what it's worth.
Yeah.
So from backtracking on your question, what I would stay away from is stuff with older roofs, stuff that is in closer to the water. It's a lot tougher. The markets are extremely tougher. Citizens, which is our government insured, they only go up to a certain amount, which is I think 700,000 in Broward and 1 million in Dade. All those high valued homes, if they can't fit citizens, they're forced to pay whatever it is. So your rate might go from 10,000 with citizens to 30, 40, 50,000 with a company that says, okay, I'll insure you, but this is what it is. So
Mhm.
there's a lot of that going on. And I just feel that it's only a matter of time before these things catch up, where either people just really can't afford it and they start dumping these properties.
Mhm.
I do feel that there will be some opportunity for investors, in the year to come when, hopefully we don't have any storms this year. That will entice more companies to come back in. We'll start to have a healthy insurance market again, and more opportunity for real estate investors and even people looking to buy their first home again.
That makes a lot of sense, and thank you for providing those specific examples, because a lot of times from the investor standpoint, you don't necessarily think about those things. You think about, oh, it's actually all the roof. Let me negotiate. Let me try to bring the price down so I can then increase the value of that. But when you talk about insurance, it's a completely different perspective. So in conclusion and in summary, can you go through that kind of your personal checklist as a real estate investor? What is the kind of the must-have different types of insurance coverages that you would get yourself? And what are the different types of coverages that you would consider as maybe optional or nice to have?
Definitely. I mean, fire, liability, because there's a lot of risk in vacant homes as well, or homes that have construction going on. So liability is a huge factor from an investment standpoint. You don't want to be sued. Obviously fire and hurricane coverage, because it can happen at any point in time, or you can just be put in a situation where you were just about to close on that property and get out of it, and we get a storm, and then now you can't sell it because now the property's damaged and you have to rebuild it. Flood insurance is also effective April 1st, is now mandatory with citizens if it's in a flood zone. I was actually checking my list this morning. They've already started sending out non-renewals, forcing people to get flood insurance. We're in a flood prone state. Everyone should have flood insurance, whether the map says it's high risk or low risk. The entire state can flood at any point in time. Yep. And make sure the deductibles are something that you can realistically absorb if something happens. It's lower deductibles, more premium, less deductible, higher deductibles, less premium. But to each his own, and that investor just has to know what they're willing to absorb at the end of the day. But those are your three main components: is your fire, your wind, and flood insurance.
That's great. That's great. Makes perfect sense. Thanks for summarizing that. So Lloyd, how do people find you? What's the best way to get a hold of you, find out more about your company, different coverages and so forth, and get in touch with you to answer any questions?
Sure. So our website is www.fcisinc.com. They can reach me at my office at 954-923-0906. Email is also the best way. I'm glued to my emails. You may not get me by phone, but I'm always in contact. My email address is my first name, Lloyd, LLOYD, at FCISINC.com.
Lloyd, thank you so much for your time today. Very generous with your insights and advice that you provide. I definitely appreciate, I learned quite a bit from this very short conversation, which I definitely encourage, everyone to just spend time and understanding the things when you're maybe not necessarily actively investing, but there's a lot of moving parts that could, impact the entire deal, and the whole deal could fall apart. So I definitely appreciated those insights, and I definitely, just like with every guest on the podcast, look forward doing a follow-up recording with you in about a year to see everything we've discussed still makes sense, still applies. So I definitely appreciated that.
Thank you, John. It was a pleasure. Thanks for having me.